Hello everyone and welcome back to Southern Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. I was actually not to post, as you can probably tell by my voice. I'm not doing that well. Nothing special, I just a little bit of the flu. It's been quite harsh, particularly today, but I wanted to come here and make this video. Thank you very much for being here. So let's go straight to it. My idea today is to kind of make a sober realistic analysis, purely fact-based, of the current crypto market and the overall macro conditions. So let's start with the first macro conditions. So job reports came out. They look better than expected, as I've mentioned before. I think it's going to be interesting if we keep getting better than expected job reports. But what tends to happen is the bond market starts to price in higher rates or lower or less cuts if the job reports are better than expected. Now, yes, the job reports are all cooked up, fugazied, that's all true. That's not what I'm talking about, is how the markets react to them, not the underlying reality. As I mentioned before, we truly have three economies. We have the real economy, where people like you and me live in, which is to the most part garbage. That's why they voted for Trump. Then you have the economy reported by the media, which is heavily cooked and heavily skewed to show positive numbers. And then you have the financial economy, which has been doing very, very well, which is purely linked or mostly linked to liquidity. Obviously, if you have any kind of black swan or white swan event, then those have an impact. But what I'm saying is, if you give enough time, it's all driven by liquidity. So we have these three economies that are very separate from each other. So if we keep seeing better job reports, doesn't matter if they are true or not, the market believes them. That's what matters. And inflation is not kicking up. Then at some point, the good news will be good news. So we are still a little bit less now, but we're still a little bit in the world where good news means sell-offs and bad news means markets goes up, right? I think that will change as we keep seeing more and more of these numbers. Now, the ISM, so the economy really, the indices, the manufacturing indices, etc., they should be bottoming out. It's not so much due to Trump. Of course, his policies help, but it's mostly also a little bit cyclical. So he's going to catch the tailwind on that front, which means the business cycle should pick up now consistently, and of course he will be able to take credit for it. Then there's an event in which I've seen almost nobody talk about, which happens in June 2025. So in June 2025, that's 4 months from now, we have this massive debt maturing that comes from the zombie virus periods. So if you recall, June of 2020, rates were the lowest they've ever been. So that debt at the lowest rates ever, which is a big amount of debt, will need to be refinanced at current rates, which are much higher and will create a huge issue. And there's only two options. Either the Fed aggressively cuts rates, or the Treasury deficit will balloon the proportion amount of the interest that the US will need to pay on its debt. In any of the two scenarios, the conclusion is the same. Currency debasement, more currency units, more dollars, right? Chasing the same crypto, which means should bode well for both crypto and the markets. Now, a couple of other things. As you've seen, Trump has threatened the tariffs. He got what he wanted from Canada and Mexico. I think he's going to keep doing similar things. I think the tariff to China is a little bit more for show rather than real. That's why it was like 10%. Because the great strength that Trump has against China is the dollar. So China needs to print yesterday. The big stimulus package that they've announced a few months ago, 1.4 trillion fiscal plus rates to zero or very low, etc. They cannot do it as long as the dollar is too strong, and I'll get to that in a little while. Which means Trump knows that they can't do it. Trump or someone in his team knows that they can't do it, but they desperately need it. So the big power to negotiate with China is the dollar, not 10% tariffs. That's just for show. There's a reason why he placed 25% in things that he wanted right now from Mexico, Colombia, Canada, and why he drops 10% in China. And the reason why China cannot stimulate with the dollar so strong is the yuan, the Chinese currency, is pegged to the dollar. So if they start printing and stimulating, that currency will lose the peg versus the dollar, which means international markets completely dry out, which means you start risking hyperinflation in your own country. And if you want to see how empires fell all across history, the more powerful to the least powerful, inflation and currency debasement are always central piece. China knows it, the US knows it, so they play this little game of tug of war. So China will need to inject liquidity, and I think we'll do it shortly, upon reaching an agreement with the US. So, stocks have recovered quite a bit, and as you guys know, I had a prediction for the end of the year, which would be TLT by December, by the last day of the year, to be above 100, and the dollar to be below 98. I've done this prediction as TLT was very low, like 85 or something, and the dollar was like close to 110. It seems very likely that we've put a double top in the Dixie. So that's the dollar index. That's the dollar versus a basket of the major currencies: the euro, the yen, the Swiss franc, blah blah blah. So it seems that we may have put a second top there, which would be very bearish for the dollar. And TLT seems to have put a massive double bottom, which would be very positive as the rates go. The 10-year rates would collapse, which would allow the Fed to cut even ahead of time without changing that much on the financial conditions. What the Fed needs to do now is to come up with a name for quantitative easing without saying QE out loud, because QE is now a dirty word. So now they need to come with something, I don't know, Project Freedom, Operation Freedom, who knows. Just create something that if you say, I'm against Operation whatever, it makes you look like an idiot. The US is very talented on this. Like the Patriot Act, which was the most anti-patriotic act of all time. But basically, if you say, I'm against the Patriot Act, what do you mean? Are you not a patriot? Are you against the US? Do you hate the US? Do you belong to the enemy? You see the point. Like the idea is to create a name to make people look like idiots if they say they're against. The US government is very talented in this. So let's go through. So stocks have been pretty much stable and rising. Bonds are finally showing some sign of recovery. The dollar seems to want to have peaked. Let's keep the fingers crossed on that one. Let's hope, and the business cycle seems to be picking up. So all of these are macro positives into crypto and stock and risk assets in general. Then let's go for more specific and also outside the US. Bank of England will cut rates tomorrow. Bank of Canada already cut rates. ECB already cut rates. China wants to stimulate, as we mentioned. So a lot of, I think the Swedish central bank also cut rates. So basically, liquidity is starting to appear all across the world, which is important. Shouldn't be all about the US. In fact, in 2017 cycle, was China pretty much carrying the global liquidity forward. Maybe that's going to repeat this time. Who knows? So that side is positive. Number two, the US stopped funding Ukraine, which tells me that they're about to sit down for a ceasefire and then for peace talks. That's my feeling. Will that happen next month? I don't know. Probably. I think it's one of the things that Trump really wants very quick. What else? The SEC has basically instructed its lawyers to stop going after crypto and only to first come to a senior official, like a kid going to its mother and saying, hey, can I go after that person over there? Yes, please, master, can I do it? So it's no longer, it's no longer drop a lawsuit first and ask questions later. Now it's ask questions and don't stop innovation. There's regulatory clarity coming in the US towards crypto. This is a bit of an uncertainty, but I think ultimately it will be a very light approach, kind of very light level of regulation. The reason why regulatory clarity is very important in these matters is because there are a lot of institutions who don't touch crypto, besides, of course, Bitcoin and Ethereum, which have more clarity, because they don't want to risk it. It just doesn't, to them, they need certainty in cash flows. You see, they sit down with board managers and so on and say, we need to forecast our budget for the next 3 years. They can't be, we were holding this, we were holding, Dogecoin, whatever. We were holding this crypto as kind of part of our reserves, but now all of a sudden this thing has a completely different treatment. We cannot sell it as long as this is going on. You see, like, it's no person is going to do it unless you have simple rules. And the idea is that they are simple. If this, and you verify, then it's a security. If not, it's not. So this is the type of thing that I think is going to happen. Yesterday there was a bit of a sell-off because people were thinking that the strategic reserve is going to be announced, and it wasn't, so the markets were disappointed. If you actually listen to the press conference, was for the most part fine. I mean, it was positive. It's another step in the right direction. However, it's all about expectations. If the markets put expectations over here, then you get over here. Here is still positive, but it's just not, it's a bit like, let's say you are a surprise team in the Champions League, right? Or if you are an American following me, like the Washington Commanders this season, right? Nobody expected anything. Going to the playoffs was great. Going to the NFC Championship was great. But obviously, if they won the Super Bowl, you get the point. People were pricing winning the Super Bowl, and they got in the NFC Championship. Is that a bad thing? No. It's great. But it depends on what people are expecting. You see what I mean? Same thing. Champions League, same thing. Let's say, I don't know, a smaller team, Atalanta from Italy, for example, goes to the semifinals. Is it great? Yes. But let's say that the majority of people were pressing in Atalanta to be European champion, and they lose in the semifinals. It's a great achievement. It's just people were expecting more. That's it. FTX creditors will start receiving their money in 2 weeks. They won't be distributed all at once, but they will be distributed over a time period of, I think it's 6 weeks, if I'm not mistaken. Correct me if I'm wrong in the comment section, by the way. And, oh boy, now this is something I need to say because it's true. There's a ton of token unlocks coming in Solana this year, and this starts February. You're talking, I think February is $3.5 billion, something like that. So these are coming. I don't know, maybe it will play into my thesis that Ethereum starting November 2024 will outperform until the end of the cycle Solana and the likes. Then BlackRock keeps buying Ethereum. Eric Trump posted on X saying people should buy Ethereum. Pretty much that's what he said. Trump's project, the World Liberty Financial, is buying Ethereum. And of course, you had Larry Fink saying that they want the SEC to start to basically accept a proposal to tokenize securities and bonds. And now comes the question: okay, if they do tokenize securities and bonds, where will they be deployed? Solana, which is constantly breaking, and if there's a lot of volume, the whole chain stops working. Yeah, I don't think so. Is it going to be BNB? I think the founder is even more hated than Richard Hart. Is it going to be any of the layer 2s filled with centralization, admin key risks, and so on? I don't think so. Ethereum seems to be the most obvious. Look, I would love to say Pulse Chain with a straight face, but I don't think that's going to happen. So I'm not going to even entertain that idea. But Ethereum seems to be the chosen one by BlackRock. Now, it doesn't matter if you like BlackRock. It doesn't matter if you have philosophical differences with BlackRock. That's completely irrelevant. They have more money than me and you. If they were a country, they would be country number 3 in the planet in terms of GDP. So that's all that matters. So liquidity keeps ramping up. And for the time being, we are still repeating 2017 cycle. When do we enter? So here is the bearish part. Altcoins have been decimated. Ethereum has been underperforming like crazy. Post-chain core coins have been complete garbage. That's it. There's no answer. There's no excuse. There's no, oh, maybe this and no. It is what it is. Now, does that mean that I lost my conviction? Does that mean that I think it's going to go down? No. It means it's an official, it's a sober analysis. It is the reality. If Ethereum closes February around $4,000, please, around $4,000. Give a plus minus 1.5%, okay? So if Ethereum closes at 3,920, it's not a big deal. See what I mean? Or if it closes at 3,000, because I already know, if it closes at 3,980, I'm going to get someone here saying, oh, it's below 4,000. You said 4,000. Yes, 4,000 is around 4,000. So for example, 3,600. No, that's way below. 3,955. Close enough. For anything above 4,000 is good. 3,925. It's good. It's not a big deal. 3,620. Bad. 3,710. Bad. See what I mean? So I hope this is clear, because I can already imagine the comments. If we get at 3,975 or something on 28th of February, then I can already imagine the comments here. Why is it bad if it's below 4,000? Not necessarily. It's just different. You remember when I've been saying that we've been repeating the 2017 cycle? If we close February below 4,000, or below meaningfully $4,000, then we are breaking the 2017 fractal, and we go into uncharted waters. Now, those uncharted waters can take you to a fabulous deserted island, or they can take you down the abyss. I don't know. What I'm trying to say is, if we stop following 2017 cycle, that doesn't mean necessarily that it's bad. It just means that, okay, we cannot really use 2017 anymore as a good comparison. Now, let's say in these things, please give some margin, okay? So let's say that Ethereum is below 4,000 on the 28th of February, but is around 4,000 2nd of March. Good enough. See what I mean? Like, that's fine. But if it's 10th of March, no, it's no longer the same. See what I mean? Like, what I'm trying to say is that people get very attached to these exact numbers. So for example, as you guys know, I made this prediction about Bitcoin back in 2023. I said Bitcoin's going to finish the cycle somewhere between 242 and 276,000. Now, let's say it finishes at 238,000. Is that a big deal? No. See what I mean? Like, it's close enough. Is it exactly what I said? No, of course. But you get the gist, right? Like, give a plus minus. Let's, for example, if I say end of February, give it a plus minus 5 days or something. Maybe it's 20th of Feb, maybe it's 4th of March, okay? So don't be so glued to the specific day. But yes, if we get into 10th of March, 11th of March, and there's nothing, of course, then what it means is, okay, we are going to find out what this cycle is going to bring us together for the first time. And then it's anybody's guess. Yes, there is some resemblance. In that case, there would still be some resemblance to 2013. However, 2013, you had like 10 coins, nobody knew anything. I don't think it's very prudent to use it as a benchmark, to be honest. So I would say 2017 seems to be the more likely one. So what I'm looking at is a lot of fundamentals, central banks across the planet cutting rates, SEC, my God, becoming pro-crypto. Pretty much their lawyers told them, and were told, stop with the current litigations. I think 50 lawyers were pulled out of current litigation, so you should expect some resolving of the ongoing cases quite soon. Light regulation framework is expected to come. Can we know for sure it's light? No, we need to wait and see. Is the strategic reserve going to be created? Well, Texas is creating it, and Texas, if it was an economy, would be the number 8 on the planet. So, for example, it would be more relevant to have Texas than the Netherlands or Luxembourg or Switzerland adopting Bitcoin, a strategic reserve. You have other countries looking into it. You have the UAE already has 40 billions of it. The Saudis are also accumulating. Those are all the positives. The negatives is altcoins, because of Ethereum, most of it, have been underperforming. Having Ethereum below 3,000 is terrible, sucks, nobody likes it. But I'm gonna tell you something. If we finish the month above 4,000, but even if we don't, the day that Ethereum fell to 2,159, I came here. They made a video urgently, very early in the morning. I came here and made a video. And I'm going to give you a little bit of tough love. You see days like that. Oh, by the way, there's also another bullish thing, which is the crypto market is officially in fear. And my experience is that crypto markets end in extreme greed, not in fear. But so let me just say this. When Ethereum flash crashed 35-40%, I think it crashed 40% in 72 hours, from 3,400 to 2,159. In order to make it in crypto, you need to start loving those days, because you need to understand what they mean in the future. Fundamentals happen today, so price action happens tomorrow. This is how it works. All the things that I just said are in place today. But because the candles are not green or not green enough, it doesn't matter. As soon as the candles turn green, then all these fundamentals that are already in place today, then people will talk about them as an explanation for the green candle. But first, what they want to see is the green candle. Then we can come with the narrative or the explanation afterwards. So most people think narrative, then no. People want to see the color of the chart first, and then they fill in the news. Example, stocks are down because of tariff fears. This was written this morning. But then stocks went up. Oh, what happened? Did the tariff fears go away magically? No. You reported in the morning because the future market was red. That's it. And so the future market was red, so you came out with an explanation for the redness. Same thing, if it's green, then all of a sudden the investors are no longer concerned. But then in the afternoon we turn to red. Oh, all of a sudden they all grew concerned again. No, you are reporting your news taking into account the color of the chart. So there's going to be a time where, in my opinion, it's going to become very obvious why we're going up. And my point is, in crypto, you need to learn how to love those big, fat, disgusting, uncomfortable pukes of big, fat red candles, because you need to understand what they mean. They are getting rid of leveraged traders, Johnny-come-latelys, non-believers, chasers of the Donald Trump pump or whatever other pump is out there, and the jitters that were planning to sell in January and February and March dump on your head because most of the KOLs told them that they were selling in April or May, which means they were selling right now. Those people got punished very aggressively. The people who end up being rewarded are the ones who believe or have the courage to lower their cost average in projects with communities, etc. This seems to be how it works. If you look in the past, whoever made the most amount of money. And with that, guys, thank you very much for your support. I apologize for my voice. I understand it's not very clear. Leave me some comments. As you guys know, I always appreciate when you also push back at me. As long as you do it respectfully, I don't mind, and I always try to answer all of your comments. Drop that like and subscribe, and I'll catch you in the next one.